Perfect. Welcome, everybody. Let's talk about digital assets, adoption, infrastructure, and so on. We all know that digital assets is a very broad topic. We will define it in the beginning so that everybody knows what we're talking about. It's Bitcoin, it could be NFT, DeFi, security tokens, and so on. It's getting increasingly complex. We have a couple of real experts here in the field. Let me quickly mention them. We have Sarah Rentschler-Gerloff here from Settlement. It's a company which is out there for quite a while. View it as a workbench for adopting cryptocurrencies. That would be my one sentence description. Sarah, I hope this is okay. Then we have Carsten Hahn here, which is a quite old consulting company already for existing financial companies out there. Of course, now also having projects in the blockchain space. We have Matthias Hirschschulz there, which is also working at an IT consulting company with lots of programming power, lots of very, very specialized people who are able to program everything what we are talking about today. Then we have Seamus Donahue here from Metaco. Metaco is one of the largest crypto custody players in Europe, but it's not a custodian, so they don't have a license. They simply is a bad word, but they are simply providing the custody tech, which is then being used at financial institutions. And finally, we have Holger Braunberger here from Intastec, also in the digital asset space, for example, quite knowledgeable about tokenized funds, which are now also very interesting from a German perspective now that the law is ready for adoption here. But let's ask everybody here in the room to present himself or herself briefly and the company he or she is working in to give you a little bit of a background. Who wants to get started? Ladies first, Sarah, is this
Okay, thank you very much for this, right. As Philip explained, I work at Settlement. Settlement is a startup located in Belgium. We have also offices in Dubai, in Singapore, and India with the whole team. And the product what we sell and we bring it to the market is a blockchain platform as a service. That means we build the accelerator and the bridge between the blockchain development and the business as well, so that people who are planning to create a blockchain project are able to use and create nodes in different chain protocols very soon. And then we bring also a lot of tools and workbenches and so on to this framework, which they can use and go forward very quickly. Before I work by Settlement, I work by DXT as an associate partner in the financial banking capital markets, and there I create business models, use cases, and so on. And before there, I worked 90 years long on Targens, a subsidiary from the eWpG. And we have created in the year 2017, so the first promissory note loan in the market, and followed by different and several other projects which we supported for eWpG and create also for other institutional players and other industries. So here by Settlement, we work with a whole industry of the whole world, and it's very, let me say, it's not boring. So
you are a tokenization veteran, so to say, because you help also with the debt tokenization at the eWpG, right? Very nice. Okay, then Carsten, what about you and what about Capco?
Thank you. Hello again to everyone. Carsten Hahn, I'm a senior partner in our Frankfurt office, and I'm leading our DLT digital asset practice here in Germany. We are basically a FS-focused global consultancy and supporting our clients now with the adoption rate increasing in digital assets, in defining the strategy for the implementation of digital assets, linked to the business model, and of course as well defining a digital asset strategy that is fully integrated in what the bank is doing from a technology perspective, integrated in the legacy world that is still going to exist. It's not going to go away. So we have to define ways where the bank is able, or the customer is able, to work in different or parallel worlds, but very harmonized. And we support a number of clients at the moment, bringing new services and products to life in the next 12 to 16 months. So it's a very interesting time, and I'm looking forward to a very interesting discussions from a number of different angles today.
Including the very important point how to integrate digital assets in legacy infrastructure, right?
Yes.
Right. Then Matthias, what about you and what about DeFi?
Good afternoon, everybody. My name is Matthias Hütschulz. I'm a partner with DeFi. I'm heading the blockchain and digital asset practice. There, before I worked full-time on the blockchain and digital asset topic, I worked as a consultant in the financial services industry mostly, and then 5 years ago, started solely working on blockchain and digital assets. And in the past years, we have been supporting many clients in bringing digital asset and blockchain related services to life, building platforms, building infrastructure in that space. And in our role and in our approach, we are supporting really the client from the strategy, the digital asset strategy. For example, we have supported a large bank to building a business model, thinking about the new ways how business models can be built up in the decentralized space, through to actually programming, implementing it, bringing it to production. And yeah, that's from my side.
Interesting to see the move on to DeFi, also from the institutional space at this point of time, right? We talk about this later. Then, Seamus, what about you and your background?
Yeah, hi, Seamus Donahue. Thanks, Philip. I'm the VP of Strategic Alliances at Mitaco. Mitaco is a Swiss-based technology company, been around since 2015. Our focus is providing tier one banks and other financial institutions and infrastructure providers to them their core infrastructure to securely integrate, store, and manage digital assets. We've got a number of products. I mean, our primary initial product was really focused on core custody technology, as you mentioned earlier in the introduction. And I think one of our USPs is we deliver both hardware-based or MPC-based custody. The full range of hot to cold, so fully connected to fully air-gapped. And we're agnostic when we look at hardware, agnostic to hardware partners. So we're a very flexible solution. I think there's many use cases financial institutions look at. It's never a single implementation is enough. Typically, they need hot, cold, warm. They may want MPC. They may want hardware. And Mitaco can deliver that all. One of the things we've launched in the last year is a solution we now call Harmonize, which is a secure orchestration layer, which effectively sits on top of custody. The idea is exactly this issue that banks start with a simple use case, and very quickly, given how fast the space iterates, the stack becomes more complex. You may have multiple self-custody infrastructures from us. You may want to work with sub-custodians. You may want to work with our competitors in the custody space. And how do you manage all of that infrastructure? Well, we have that layer that sits on top, which we call Harmonize. So you have a single point integration, integrate into your legacy infrastructure, as we talk about. That's the big issue for the large institutions, and a secure way to manage all the policies, regardless of whether it's infrastructure from us or third party or a sub-custodian. So you have a single holistic kind of secure pane of glass to manage all your workflows and management of keys across the digital stack. Now, we work with institutions such as BBVA, DBS, Börse Stuttgart in Germany, Northern Trust. I think we're part of the leader in the tier one space, and we continue to see that grow. So my own background is I've been banking. I started in banking for 20 years, running various trading business, very active in the intersection of electronic trading and derivative markets. I ran a crypto exchange, ran my own startup around commodity trading platform. We've been with Mitaco for 3 years. I was a first commercial employee. So I've been through the whole journey of product market fit and scaling the business now with the larger institutions in the market.
Very nice. And you're saying could be that custody is not a commodity, right? That's what people have said a couple of years ago. It's not.
Well, I would say custody is not necessarily commodity. Custody is essential. I think it's mature now compared to it was a few years ago. So there's lots of good solutions in the market, and I think you may want to use many of them. I think how you manage multiple solutions is something that's not mature, and that's really where I think we're differentiated. We have that layer that sits on top and securely orchestrates them, and that is a new space and a requirement as large, complex organizations enter the market.
Very nice. Okay, and finally, Volker, please also introduce yourself briefly and Interstake.
Yeah, hello everybody. My name is Volker Braunberger. First, to me myself, I worked the last 2 decades as a management consultant, comparable to Carsten, I think, for the capital markets piece on one hand side, and with a clear focus on the investment management fund industry, where I supported a lot of European, local and global asset managers and security services providers. From 1st of July on, I'm now embedded in the as a CEO in the Interstake. Interstake is a company which offers purely management consulting aspects and services around the application of DLT. We are supporting our clients not only by elaborating digital asset strategies, but also implementing them with an integrated way, as some of the others already mentioned. Plus, what we are doing is a kind of an education, because we do see a bullish situation in the market on one hand side, but at the same time, a lot of people which are still a little bit hesitating regarding implementation of digital assets. It's not the case that each and everybody is totally convinced of that. There is a lot of education needed from my view, because we do see several levels of the entry point of the different clients. Some of them have concrete use cases, other ones are just thinking about should we do or should we not. And we are offering a holistic view on that, independent from the level of the thoughts of our clients, and not only elaborating, I would say, conceptual slide decks and or strategies, but also with our partners together, we are focusing on an end-to-end approach. That means elaborating strategies, conceptions, and implement them in an integrated way within the indeed legacy infrastructure from our clients.
Excellent. Okay, perfect. So to proceed, I would propose that we first try to define digital assets. You know, it's a buzzword and it encompasses basically everything running on blockchain system, maybe to leave out the digital euro and so on. But besides this, it could be everything. Who wants to give it a trial to define it?
I can start maybe.
Could be a perfect exam question, by the way, Matthias.
Yeah, I'm actually, Philip, I would even include the digital euro in its various forms. And I would say, I would define digital assets really as a very, very broad term. As an asset, obviously, it needs to have some positive economic value, at least at some point. It's something digital, obviously. We are not talking about some physical token or something. And it needs to live on DLT. And with that kind of very broad definition, we see something like a crypto asset, or which would be called, for example, cryptocurrency as a digital asset. We would call a security, according, for example, to the new German law with regards to electronic securities. That's represented on DLT, and a decentralized register would call digital asset as well. So it's a very broad category of assets, including, maybe we come to that, talking about NFTs and other assets.
Yeah, makes
That's
sense.
my approach.
Who wants to add something, for example, pushing?
Yeah, perhaps if I may, I split it from my view always in three sections. Digital assets, I try to make it always a little bit more concrete, that we say, I'm totally with Matthias, that in the first step for a lot of people that I'm talking to is cryptocurrency a baseline for crypto assets, but it's much more than that. And I would say in addition to cryptocurrencies, standardized products for issues such as shares or bonds have so far been mapped and transferred via blockchain using the so-called security tokens. And this is for me the second part of digital assets. The security tokens, which could bring in non-eligible or non-liquid assets on a more liquid space via using DLT. And the third category that I do see is then the crypto security, which I would define as, in the difference to traditional securities, is here the type of issuance, because the crypto security is a more or less electronical one, whereas this securitized one that we see in the security token, where always at the baseline there is a securitization needed to bring it on chain because it's asset backed. And the crypto security, more or less based on the German eWpG, Electronic Securities Act, now allows to issue more or less securities directly on DLT via using blockchain technology. That's for me these three parts: cryptocurrencies, security tokens, crypto securities. Would be my view.
But how now to get in DeFi tokens and NFT tokens, right? Should we include it? Yes or no? Who wants to add something here?
Yeah, I think, yeah, please, Carsten. Yeah.
Yes, I think they definitely need to be included, since we see a lot more, the adoption rate specifically on something called NFT non-fungible token is growing at a very high speed. And so we do see a lot of liquidity in some of the NFTs in the market, of course, specifically in the art market that is publicly well known. The number of NFTs and the liquidity of the market is rising. But even when you look at areas like collectibles, and from an asset management perspective, specifically for crypto asset managers, there's a huge interest in growing that NFT market and allowing their customers access to a certain liquidity in these specific assets. So I would definitely add NFTs to it. And I would also, and that's how we look at it, also look at stable coins to a certain extent as a digital asset. So it's how we see the universe of digital assets.
Yeah, very interesting. Concerning adoption of all this, it's interesting to see what's going on, right? Yesterday we had the first release of a Bitcoin ETF in the US. You know, apparently it's not like the perfect ETF out there. It's just linked to Bitcoin futures, but still it's a major step where the SEC finally, after years, did not object anymore. This, in my mind, this is really substantial what's going on here. Then we also have had China forbidding everything with regard to crypto assets. With this, the risk coming from China that the price might break down is now gone, right? So it's very, very important that this risk has always been out there. This risk is now gone. And after China's announcement that they want to forbid everything related to crypto assets, this was 2 weeks ago. Now the price is 40% higher than around the announcement, right? So this is really substantial. Then in the NFT space, as Carsten has said, there is also a lot going on. But sometimes we ask ourselves, you know, what can you do with NFTs? You know, in case I purchase an NFT, then I have it, you know, and then, you know, what happens with it. So there is some room to argue that NFT is indeed a little bit about speculation. And we have the domain of security tokens, including tokenized funds and digital securities in Germany, which also now get some momentum. Would you follow, Carsten, would you follow this judgment about, yes, adoption is coming, but we have to always keep in mind there is substance, there is momentum, and there is speculation?
I totally agree. But what I think was very important for the industry was the approval of the first ETF. So that legitimizes basically crypto as an asset class that is regulated, and with the regulation comes trust from the market. So that legitimizes the asset class. So I think with the decision that has been made public yesterday, the adoption rate will dramatically increase over the next couple of months. And since this is the first ETF, I expect personally that a number of ETFs will get approved over in a couple of the next months. So I think that is, for the industry, very important. And so a lot of the market participants waited for this, and now we will see the adoption rate rising also for institutional investors. As for the NFTs, there's definitely some hype and some boom around it, and there are some NFTs out there where I don't see a value and I don't see liquidity in the market. So you're holding the right of the NFT, but you're not actually able to sell it. So it's a high risk investment. So you should definitely have a clear view on the NFT itself before you start investing in any NFTs. I do believe that some of them will stay stable or will be around for the next couple of years, but we will see a lot of NFTs, specifically only community specific NFTs, that will just be on the market for a short while. That's my personal opinion.
That's a good point. But now a question to everybody here in the room. Imagine you are an executive at a bank and you watch this panel discussion where we have now agreed on that momentum is there in Bitcoin, DeFi, security tokens or digital securities, tokenized funds, NFT, stable coins. There is momentum and dynamic going on everywhere. So it must be confusing for an executive at a bank who needs to make a decision where to focus on, right? So what would you recommend? Do everything at the same time, start with this, start with that, first do education. What would be your recommendation with these multiple segments or clusters, which are all independently developing very dynamically? Anybody has an...
Yeah, I'm happy to jump in. I mean, personally, I think there's a meme, which is a meme in the market, which is quite popular, crypto will eat the world. And I think, to your point, we're seeing that across so many asset classes. When whether it's the art market where we're, as Karsten pointed out, I think the NFT market now is probably as big as the traditional art market. I think the traditional art market is about 50 billion per year, and I think the last quarter NFTs traded 10 billion. So these markets, whether we perceive them value or not, we're seeing a huge impact across many different asset classes. Now, where should a firm start? I think is a big question. But I think where you can start is where you can build a business case. And I think looking at something relatively simple, providing crypto custody for the major cryptocurrencies, Bitcoin, Ethereum, which combined make up most of the market cap, is something that you can define basically, one, who the clients are, you can define potential addressable market of your existing clients, how many new clients you can pick up, you can define margins, you can define the services, so you can build a very clear business case. And I think the fantastic thing about crypto is, all of these assets, once you have the infrastructure in place, whether it's tokenized art, whether it's a security, whether it's any asset, native or a representation of a real world asset on the blockchain, all of them could be supported by the same infrastructure. So you build for crypto custody, you build the services there, it gives you effectively, or a large institution, the free option on the rest of however this market evolves. And we see it evolving at a mind-bending pace. rather. So I think my advice and what we see from the larger banks is the first use case is build for crypto custody. And the rest of the things they can start building for, whether it's tokenized payments, tokenized currency fiat, whether it's tokenized art, securities, etc. All of those are the same infrastructure they can leverage going forward.
I would agree with that, perhaps, if I may, that custody is on one hand side definitely the backbone for any digital asset strategy, but I would never recommend any client to start with an implementation of a custody solution before they do not know what they will bring into this solution. I think the first step should always be to reflect on clients or a bank's side, what is the purpose or the investment strategy of their clients? What are the right products for them? Are they more focused on making non-eligible or non-illiquid share classes or asset classes more liquid, or what do they want? And that's always in my understanding and based on my discussions that I have very often the client, the investor, the institutional and or the retail client, they do not know really the advantage that digital assets bring in for them. And they always ask, why should I do that? Why should I invest that? And that's where very often the business case on bank side there or on financial institutional side is asking exactly that. What's the volume? What's the potential effect that we can generate for our clients to open up new asset classes or to reduce costs and or to bring perhaps retail clients in asset classes where before blockchain too limited for them. That means I think the first step is always to think about what's the right digital asset for my client group. That's my view. And then I'm totally with you that you have, before you tokenize anything or issue any electronic paper, you have definitely to first a decision about crypto custody.
Maybe I add a few points to that. So before I answer your question, Philip, maybe two more remarks. So the first remark is that indeed you're right. I mean, first, some of our clients we really need to convince that the topic is here to stay, and that then triggers the action to move into the space. And some of the viewers might now ask why it took a few years for this adoption to happen and to speed up more and more. And I think this can be explained by a few aspects and pieces that need to come together. First of all, we mentioned the regulation that needs to come. First of all, the change in perspective, I think, that we see with large players that maybe in 2017 still said Bitcoin is a fraud and now implement services for that. That's completely changing in the industry. And like tech providers like Metaco and others that really provide the secure infrastructure for that. This is really all of the pieces need to come together. And then there was still the kind of this chicken and egg problem. Who comes first? The clients that want to offer that want to that ask for the assets and the providers that can actually have the infrastructure and the services to do that. So that's, let's say, that's my answer to why it takes some time. And I think in Germany, it's like that the big players and also smaller players, they are building infrastructure in the background, and we'll see several announcements in the near future. So that's that part. But you ask how to start this journey, and I would agree with Seamus with the approach that you really need a point where you have a business case and really make a serious attempt to move into the space and not move out of the, let's say, trial and POC kind of approach where I test some use cases, but there's no real business case behind it. So really the approach, a good approach, I think, is to start with let's say, smaller case, for example, the trading and custody of crypto assets. I think this needs to come together. Let's say a standalone custody solution might be difficult to sell, but if you have the clients as a bank, for example, and offer them an inroad to digital assets, to crypto assets, then this can be combined with a custody solution. And then think about, if you do this kind of first step, then you can already think about what kind of roadmap you might have and what kind of infrastructure you want to build out to support later use cases. And I think that's a really important aspect, because the space is changing quickly, new use cases coming up, new assets coming up, new technologies coming up, DeFi is coming, NFTs are coming, and you cannot do your 10-year plan from now what you will want to build up. You need to be agile, you need to lay the foundations for your digital asset strategy, and the custody part is really a very important part, because you cannot compare it completely to the traditional world, because parts of the business processes now move to the settlement layer in the form of smart contracts, and more logic is there and can be accessed via the custody and needs to be enabled by the custody. And that's why it's, I wouldn't say it's a commodity, because there's so many things changing. Maybe you cannot earn too much as a standalone solution with it, but you can. It's a strategic importance, because it enables you to build services on top and build the foundation for the digital asset strategy. So that's why I think it's key.
Makes sense. Sarah, Carsten.
I think we have discussed a lot of the points here, the kind of the digital assets classes and so on. But we should don't forget, it's everything what we discuss here is depend to the society. So the society, from my point of view, they give us the request what they need and what they will, right? And so, for example, we have discussed with NFT from our point of view at the moment, it's high risky, it's make no sense. But from another perspective, it makes sense, because NFTs in the arts, the music, and sports and so on, they give them a chance to have another salary, for example, to bring more trust in the salary, to bring more trusty for selling and buying in this, let me say, in this society field. So the new generations are able and and are willing to invest in them, because it's a lot. It's a small money with what they will invest. And I see the same on the digital asset side. If I look on, for example, on the real estate market, the real estate asset is for me a very, let me say, interesting asset which we can tokenize, which we can use for in our financial branch as well, in different use cases. We have a lot of possibilities there. We can build the complete circuits from the use cases regard to them. And we can bring more trusty, we can bring more sustainability, what we discuss at the moment, in a brightness way. regarding to the ESG scoring, regarding to the SDGs, regarding to the SDFRs, which we also have to attend in our financial branch. And so I think it's not the questions what kind of digital assets we will use and what we will create, or what kind of assets the bank has to decide to bring on the market. I think it's more the questions how we can do that, and with which resources we can do that, because the digital asset industry means that we need new skills in this branch. A central-based business, it's not the same as a distributed business. This is my experience now from, since 2016. And I think we should change our mind in this. We should also change, let me say, the motivation to bring more new asset classes on the market, which people are willing and have the motivation to invest with small money instead of the big ones. So I think at the moment, our society has a change that nobody's at the moment, or a lot of people are not at the moment, are able to buy a house as investment class, only for the liquidity, for example. And this is from my internal our requirement, what we have regarding to this industry.
Interesting point. Carsten, you want to add something?
Yes, thank you. And I think it's my personal view is across all of this from an institution. When we talk about banks and asset managers, I do believe that custody is, sorry to say, seamless. It becomes at least a point of commodity, but because every institution will have to provide some form of custody. And sometimes it's always about peer pressure, because we see the fintechs and the non-banks also providing custody services. So looking that the Amazons will provide custody service, Apple will in the future provide custody services. We see Square, Stripe, PayPal, everyone is out there and at least providing their customers the opportunity to safe keep digital assets, whatever the digital asset then might be, depending on the business model. So for me, the ability as an organization to provide safekeeping and custody of digital assets will become a commodity at some point, because you can get it at a number, you can get it as a customer at a number of places. So also take the decision, where is and that's still the advantage that I think that banks have, the trust in the security and the regulation, so that customers potentially are more willing to store digital assets at a bank rather than a smaller fintech or an organization that is not as regulated as a bank. This is one element. And I also do believe that the changes that we see across the world, when we think about fractionized investments rather than buying whole units and everything, it will definitely mean a dramatic change for society. We will see new ways of looking at assets, the ownership of certain assets out in the world. But that is also something that needs to be supported by whatever solution is out there and implemented at organizations. And as for banks and asset managers, we still cannot leave out that there's still an existing legacy world out there, where we need to make a connection between the digital or blockchain or DLT world into the existing legacy world. These worlds cannot live just only in parallel. There needs to be a connection.
Yeah, interesting point. I made two remarks here, because in case I'm trying to reconcile what everybody of you has said, then I have 2 points to add here to reconcile this. First of all, I now feel that yes, you should start with custody. This would be possible, but I think it makes also sense to really check what is the customer base. You know, there is a distinction between young retail people, 30 minus, versus German savings banks with customers 60 plus, you know, who are very skeptical still with regard to crypto assets. And on the other hand side, the question is, you know, who is your customer base? Is it retail people or is it institutional banks? Because large-scale pensions fund might still stay away from Bitcoin for years, for example, because they cannot justify the electricity consumption to their stakeholders. So for them, for example, tokenized funds could be more interesting, right? Whereas young retail people, 30 minus, they would never ever purchase a bond anymore, right? Because they know everything what's going on with regard to inflation and stuff. But pension funds don't have another chance, right? So I think who is your customer is, as always, quite decisive where to start. That would be my way to reconcile what you have said. And the other point is that's an interesting remark. I hope so, and I hope I'm not saying anything wrong. I asked you what should a bank executive do now, and I just would like to mention what did you not mention. Yeah, a couple of years ago, people have said we have to use blockchain technology for internal processes or internal documentation or post-trade settlement, right? Or origin of something, you know, this the provenance use cases and so on. These are all use cases which you have not mentioned. Maybe that was my reason because I posed the questions in a specific way, but all of you acknowledge that digital assets are there to capture some value, to represent assets, and blockchain technology might not be best used anymore for streamlining internal processes and so on. Tell me if this remark is right or if I over exaggerated here.
No, this is absolutely right. One comment I would like to add, if I'm allowed. One of the biggest changes also for the industry and from our day-to-day life is coming up is that we are moving into a 24/7, 365 days per year business. And then most of the organizations that we talk to have to adopt to that idea because the business as we run it today is basically linked to business hours. And what we see with the adoption rate of blockchain digital assets and potentially secondary markets that are coming up, it's a 24/7 business. And you have to be prepared for that. And that is also a huge shift from the way we look at the business. And that's for most of the organizations a real challenge to find their way around a 24/7, 365 days per year business.
And maybe also add something. I mean, really, exactly as you said, a few years ago, the discussion was around reduction of costs, streamlining of processes. But I think the effect is much more profound than just, let's say, efficiency and cost reduction. It's really about new assets and products. So it's one of the aspects. So new assets and product, it means that for financial service for many years, often the products were kind of a commodity. Now there's really the opportunity for service providers to build new products, to become creative, to build funds that leverage, for example, DeFi protocols and do something differently to your competition. And so this is because, you know, we haven't reached a maturity in that space where, you know, all the customer demands are already fulfilled completely with regards to features, security, and so on. So there's really that potential, and I think it really becomes a necessity for players in that space to offer something. And Carsten, as you said, each bank in some way needs to have that custody part in the mix, be it they implement it themselves or they use a third-party provider, but they will need to have it. But then they need to think about how can they build better products. And that's now a huge opportunity, I think. And the second thing is there's completely new economic concepts. If you're looking at in the DeFi space, how trading is done without order books, there is ideas like utility tokens, things like that, really completely profound new aspects. It's much more than efficiency. The deconstruction of financial services basically through smart contracts, that each of the parts can be serviced by different parts and different stakeholders. There will be new roles coming up that can be used. I mean, we won't live in a fully decentralized world. There will be room for banks and third-party providers to bring services, but this needs to be tackled. And I think in the DeFi space, we'll be seeing a similar convergence of the CeFi and the DeFi space, as we have seen for example, for Bitcoin, where we need custody, where we have regulated services. We are already seeing it, for example, in Germany, that there will be regulated services that, for example, build the access routes to the DeFi space. And maybe another profound change is the internationalization, because suddenly the assets are available not only 24/7, but worldwide. And suddenly, if I build a service here, another player on a totally different part in the world suddenly can access that and I think that's another important change.
Yeah, I mean, I would add, I fully agree with all that. And add to your why the narrative's changed, Philip, as you described, basically how before everyone was talking about efficiencies, now they're talking about crypto. Is before crypto was really much a Wild West. It was a criminal, like it was categorized as this AML risk. So everyone was focused on DLT, but not blockchain. We can't touch that stuff. That's something that's a no-go. Now I think that the institutional adoption we've seen by some of the larger firms get in this space, and now finally, I think the SEC move here is telling you it's here to stay. I think once China banned things, although I think in a stroke that was probably the best thing that happened for the market, because now we've offshored out of China most of the mining capacity. We have a lot less systemic risk to China, and the whole sort of narrative around, let's say, carbon footprint has changed because don't have dirty coal in China mining. I think the main point is the SEC and the US government is not following the footsteps in China. It's not being banned, it's being institutionalized. So indeed, at a board level where banks still think this is a flash in the pan, it's a scam, it's going to go away, it's not. I think the SEC is telling you now it is part of the financial landscape and it's here to stay. So it's no longer about just the technology is sexy. We can use this to reinvent kind of the tech stack in the bank. This is defining entirely new asset classes, delivering new client bases, and is really changing the landscape for potential opportunities for banks to capitalize on.
Interesting point. Maybe,
perhaps I may some point add, Philip, if you allow, then I totally agree. But if I just reflect this discussion, I see again we are all blockchain enthusiasts, and what Matthias potentially opened up is the horn of plenty what blockchain is offering. And again, I think that a lot of our clients, a lot of banks and financial institutions currently do not know what the potential is of blockchain. So I would always recommend it, and then back to my point of education, that outside of this world, outside of this round here, where we are all, I would say, very informed and about what blockchain can generate on added value for the banks and financial institutions, but a lot of clients outside, they do not know what potential new asset classes are feasible with using this technology. So my guidance is always to say that let's educate them, let's help them to open up their mind to be creative with that, but step by step. And what we should not forget in our discussion is the regulation piece. Because Philip, you mentioned pension funds. I think pension funds, even if they wanted to invest in crypto assets, they are not allowed currently, at least in Germany, because cryptocurrencies is not part of Anlageordnung. So we have strong regulations even in place, which are not which do not allow our clients to invest in each and everything if they are on institutional level. On a retail level, that's another point. That means 2 points from my view. I think education is still needed in a very wide area, from my view, to open up the opportunity level of blockchain. And on the other hand side, we should never forget the legal or regulatory restrictions that are still in place. We have not a harmonized legal regime even in the Europe. Metaco is in Switzerland. They are a little bit up front the wave, Germany as well, but the rest is quite disharmonized, which closes up such a cross-border distribution, all this stuff, because the reporting piece, the tax piece, all this stuff which we have to bring in if we integrate digital assets are not harmonized on a I would say on a level that enables such a global use currently. But I'm very bullish that will change within the next years. Latest for you, if the MiCA regime will come up next year. But these are a little bit my concerns or my reflections from this discussion. Yeah.
Interesting. Sarah, maybe talking about infrastructure, you are also operating in the area of infrastructure. I imagine your solution such that, for example, I can deploy a template of a smart contracts on this chain or on another chain and so on. So is this also something which is currently being demanded, because this is apparently something entirely different than cryptocurrencies, right?
It's different to cryptocurrencies, let me say, to the business aspect what we discuss here, but it's also have, let me say, a dependency for this. Because if I come back to your questions, as a banking executive today, I will save my clients. I will grow my clients in the world. And that is the reason why we need the bridges between the central-based business in our portfolio from perspective from a financial institution, and also for the distributed world, for the distributed business, what we talk here. And because for I come back to the younger people. For the younger people, it's not. It's even if they invest in an asset which they found it in the APAC market or in the North Central Europe market. For them, for they, it's not necessary. But if I come back to the infrastructure, as I said, the infrastructure is more and more important regarding to the regulatory, regarding to the security, regarding to the compliance, regarding to the trust. And from my perspective and from our experience, it's very important to have an infrastructure which they can grow, which they are flexible, and which they are fast. Because we have requirements regarding to this distributed business, to the infrastructure, and we try to bring this in, let me say, our existing cloud technology, and this is working, but we have then open issues. We have also the regulation request and all this stuff. And so I think it is more and more important that we spend the infrastructure that you can use very quickly. So it should not be a big question, how can I create a node in Corda or in another chain technology? Because the next chain technology generation is waiting for the door. Dark chains, mesh technology, and all this stuff is coming more and more up. And I never look on this market over the digital assets only. So I see on one hand, we have the blockchain technology regarding to Bitcoin, Ripple, Ethereum, which is more supporting the DeFi industry. We have the DLT assets, is more than the Corda, the Hyperledger Fabric. And then we have this big worldwide supply chain, ESG scoring stuff. And this is more like and needed for graph technology. So also apart from let me say, distributed technology. But this is at the moment the picture what I get from the market. And if you look on the digital asset industry, that we become speed regarding also the infrastructure, we should not think about that as let me say, as a company like DeFi, I will implement now a solution which is based on Hyperledger. Tomorrow come a client with a request. Now I will have this on Hyperledger Besu, and I start the development from the beginning on. So that means new construction like demo, independent languages with frameworks, with ecosystem is coming up, which I define my business, and then I can bring this business to the chain, whatever I need and whatever I want. That means the ecosystem must grow, and we should have an attention that we can let me say, be the accelerator for growing this ecosystem. That I think this should be the interest for a banking executive to grow his own ecosystem with the world together. And then they can start with creation of new portfolio and all this stuff.
Excellent point. Let's talk about integration of this infrastructure to legacy infrastructure, right? How can we solve this? Is it already solved? Do we need to build everything from scratch? Is this possible? Or do we need to implement multiple APIs, interfaces, standardized data formats, and so on, to bring this new world together with the old world? Who wants to take this question? Maybe Carsten?
Thank you. Yes, I do believe that's the biggest challenge, actually. So that the infrastructure that we see around the digital asset ecosystem is developing in a very fast way at the moment, at high speed. But when we look at financial institutions, we still have to face the regulatory challenges, the risk management, and everything that has to be in place, even with the integrated digital asset ecosystem. So what we do see is that there's a huge challenge around it, how to use it, but you have to find an efficient way how to use existing processes that are in place already, starting from potentially trading applications, order management systems, then integrated into position keeping systems as well, the regulatory reporting, the risk management, and the ledger systems. So this is for us always one of the biggest challenges. When we look at the effort of implementing a digital asset ecosystem at clients, it's not about the infrastructure of the digital asset itself, the complexity begins if you want to integrate a digital asset infrastructure in a smart and efficient way into the legacy to use the existing processes that have already been approved by the regulator. And I'm more than happy now that we see like Siemens and Metaco offering solutions that make it a bit easier for us and the client actually to combine a digital asset infrastructure into an existing legacy world that is also changing and still developing.
Yeah, I think it's not an either or question, whether it's, let's say, completely greenfield approach and it's a completely parallel system, or everything is done in the existing systems. Rather, it's a use case dependent and process step dependent question. So which parts will be in new systems, which parts will be implemented in existing systems, and what's the best approach here? So let's, for example, let's take as a use case, for example, crypto asset trading. There might be specific players that have implemented order management systems that can handle connections to the various exchanges that can ensure an execution, best execution, that can handle the delays and specialities of crypto exchanges and so on. So this might be something you don't want to rebuild in your own order management system, but then other aspects like your risk management or reporting or other things that might be integrated. And then you need to look at the capacities that you have for the respective system. How long does it take? Do I need to have special people that can do the changes? And this can be then a very long and complicated process if you go into the existing systems. So if it's possible, it's definitely quicker if you have some kind of greenfield approach and have some new systems built. And I think we need to realize that for a very long time, both worlds will exist. And I don't think that we will see that in the, let's say, in the next 5 years, everything is on DLT and we have one infrastructure and the rest, I can shut off my old systems. That's not going to happen. So I think both will be, as a bank, I need to support it, both the old and the new world. And I need to have a good decision how to integrate both together and support both, because as we realized earlier, it's here to stay and we need to live with both worlds for now.
Interesting.
I would echo.
Yeah.
Just jump in 1 second. I would echo what Matthias is saying. I mean, we have clients like Zodia, which is Standard Trust and Standard Chartered and Northern Trust. We have launched a standalone entity, so they didn't have to face all this integration. But for most, they want to base off their clients' traditional assets and crypto. And I think what's critical there is, over time, the proposition of the whole digital stack is it could reinvent the core banking stack, and they don't want to make the same mistake of building legacy upon legacy. I mean, what you have within the banks I've worked at in the past, you have 7, 8 different records of what the source of truth is, basically, right? And ultimately, you have the blockchain as your source of truth. So as you build into the digital space, you want to make sure that that you have a core stack, and that you don't create this sort of spaghetti where you start agile because it's a simple solution, and as the stack gets more complex, which it will. I mean, as we all said, the space is iterating on a daily basis. You need to make sure that you're not stuck. Your old legacy infrastructure is not slowing you down. So you want to have a solution that basically enables you to kind of adapt quickly, to be agile, so you can deliver those services as they evolve. Otherwise, you'll very quickly fall behind. If every new solution is integration in the core infrastructure, that's a problem. So we launched a solution exactly for that. We call that secure middleware, which is a secure orchestration layer. We call Harmonize. So you integrate once. It's not easy to integrate into a bank. We know that, but you do it once, and then everything else becomes connectors into that. So you have a very agile stack as the space moves, which it will, and rapidly.
I have one question. We are soon at the end, unfortunately, but we have one question coming from the audience, because it's interesting that we so far talked primarily, of course, about companies in the financial industry, but we should not forget there are also manufacturers such as Siemens, Daimler, Bosch, and so on. Yes, they produce machines, but they also have financial departments and so on, like Volkswagen Financial Services and so on. So question is, What about if you are a manufacturer of such machines, for example, and you do not want to invest in such assets? That's what we talked about. But as a manufacturer, you would rather want to tokenize your machines, your goods, your receivables, your equipment, and so on, and do, for example, make some products out of it or do something with these tokenized machines. Does this make sense or not? Because it's interesting to see that the financial market right now is really gaining some dynamics, for example, in Frankfurt, in Zurich and elsewhere, but the industrial companies out there, you know, in entire Germany and other countries, you know, are really lagging behind with blockchain when regarding blockchain technology. So what would you recommend to a manufacturing company?
I think it makes total sense. The Volker, please go.
Yeah. Okay, thanks. I would say it depends. My question would, the first question would be, why do you want to make that? If you want to make an off-balancing of your assets, that makes totally sense, as Carsten already started to with his speech. But I just would first discuss with the clients, why do you want to do that? Do you want to make it securitized as an asset class? Do you want to bring it off your balance sheet? To bring cash in your balance sheet? Why do you do that? Because we have always to focus that tokenization will generate some costs, and therefore I would start the discussion for the rationale, to understand the rationale behind. And I'm definitely a friend of coming up again with a business case for that, to underline and to ensure that it makes sense from an economical perspective. That's my view on that. But Carsten, please add something or see it in a different way.
I'm just no, not totally, but what I look at when I look at manufacturing firms is that there's a huge benefit actually applying tokenization to some of the value chain and the production chain. So when potentially a certain specific asset is initially built, you can tokenize it. You have the certificate that this specific element is unique, and then you can follow it also through the value chain, and the data becomes available across the globe in all areas of the organization. So I don't look at it only from a financial point of view, but also how can tokenization speed up a production process, provide security and transparency as well. So that's how I understand it from. And then of course there's the whole element of looking at tokenization or crypto from a corporate treasury perspective. But I totally believe that we will see a lot of tokenization in the industry world and production world in the future.
But this would then also mean that on behalf of an industrial company, the best entry point for blockchain technology would be the financial department within this industrial company, right? It's not necessarily the R&D unit where new machines are being invented. Does it make sense?
I mean, what we're seeing initial interest from some large multinationals operate in multiple jurisdictions. I mean, you mentioned some companies, they'll operate in 100 plus different locations, where they have vendors in different currencies, they've got suppliers in different currencies, employing different currencies. And if you step back and look at those companies, they're probably some of the biggest foreign exchange customers for the banks. They have a lot of foreign exchange friction. So to me, one of the easier, not easy, because nothing's easy when you're doing a large multinational, but one of the use cases they could probably build a business case on and define potential savings is taking the whole idea of an internal settlement coin, that's a corporate coin, a Siemens coin, if you want to pick a company, and use that as an internal clearing mechanism. You significantly reduce potentially your external transaction fees you're paying into the financial sector. And these are in the hundreds of millions of dollars. I mean, these corporates will be some of the biggest customers of the global banks. And that you can probably define a potential use case, define a potential return. And I think that's where the potential entry point is for a lot of the corporates.
Yeah, interesting. Yeah. I have a last question I would like to make for this round. In case you're now viewing how time has passed over the last year, we saw Germany's government creating a couple of regulations. Now they are in place. Now they provide legal certainty, and now banks and asset managers and companies are starting to deal with this because the rules are now clear and now they are ready to invest. But they could have also launched their products earlier, but they didn't. So they waited until the rules are getting a little bit more clear. That's my interpretation of what's going on. What about MiCA? Because with MiCA, the rules are getting more and more clear. The MiCA comes to Europe in maybe 1 year or half a year, who knows? So will the same history repeat again, that first this law called MiCA needs to be in place for 1 year, then it's 2023, 2024, and then companies are starting to launch their products and investigations? Or do you see do you see already that companies are now, that the rules are getting more and more clear, inspecting MiCA, even though the rules are not yet in place, but just coming to us next year? You know, I hope I brought about this question nicely. Who wants to?
I haven't talked to a client saying that, okay, now we first wait for MiCA being finalized and then we start. So the clients we are working with, we're trying to anticipate what's going to happen, what kind of asks there will be, and then they will already start and not wait for MiCA. And especially in Germany, I think we have enough regulatory certainty, at least in some of the use cases, to start a regulated, compliant business. And so I wouldn't wait for MiCA.
Don't wait. That's your recommendation. Carsten, Volker, any points to?
I totally agree. I mean, with the draft version that we've seen over the last couple of months, stayed pretty clear where the direction is going, so that at least we have enough certainty at the moment to support the client discussions, and that's the most important element. We know it's coming. We see the direction, and there might be here and there smaller or detailed changes that will impact all the work that we've done so already, but there will not. We don't expect any huge changes in the regulation anymore at the moment. So the overall direction is pretty much clear for the market.
Yeah, that's a very nice closing word. Who wants to add a last closing word? Anybody here in the room? Okay, then I'll do it. It will be fascinating hours and days ahead. You know, we are just $400 away from the Bitcoin all-time high.
Keep the fingers crossed.
And it's fascinating times. So, but to summarize what we discussed is, you know, it's a broad discussion. It's getting not narrower, right? It's getting even more broad as time is passing, and time should not be lost to investigate the topic with digital assets and all its aspects around it, right? Perfect. Then let's close this session. Thanks much for this very, very engaged discussion. And yeah, let's talk soon.
See you soon. Thank you. Bye-bye.
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 Bye.